Hello traders, Cousin Vinny coming to you from theclosingprint.com, March the 6th, 2022. In this edition of your weekend video newsletter, we'll discuss the markets, stocks, and current investor sentiment. The heat map is mixed with most sectors that are related to energy performing very well. Commodities are performing, wheat and corn prices are higher, while the sector heat maps are bearish to neutral. In addition to what we're seeing in small caps, while the international markets have become a little bit more bearish, with only the South American countries performing better than expected. Most of the IBD 50 names that are on the list here are from the energy sector or related consumer staples, utilities, or healthcare, in addition to some names from the real estate group. As we start the week with 4 bullish, 8 neutral, and 8 bearish, telling us to be cautious again this week, with support at 4,300 on the S&P 500 and resistance at 4,400. The vol triggers at 43.95 and 0 gamma 44.14. If for some reason we manage to get above 44.14, and the 21-day would look for a follow-through and a breakout of the current descending channel. Therefore, the trend is down until we manage to break out and retest the 200-day moving average. Until we manage to break out of this descending channel, the trend remains down. We have RSI below 50. We'd like to see that moving higher. That would happen as a function of price, of course. Some of the more bullish indications and a level that we need to stay above is the 4,300. As you can see, we are closing in the upper half of the daily range over the last 3 trading days. As stochastics continues to move higher, that's telling us to look for closes in the upper half of the daily range. That's happened 2 out of the last 3 trading days. So a bullish start to the week, while not anticipated at the current time due to geopolitical tensions getting worse before they get better, there is a possibility, and if price starts to lead us in that direction, we'll dispense with our opinion and just go with the direction the institutions decide to take us on this week. Any move above 44.14 and the 200-day test would be a breakout of this descending pattern. Growth stocks and the NASDAQ 100, the Qs respectively on the weekly time frame show weakness. We're below all the major moving averages. RSI continues to drop, but is getting to oversold very quickly. In addition to Fibonacci levels taken from the February 2020 COVID lows, we're looking for potential bounce and support near the 382 Fibonacci, the 320 level on the NASDAQ Qs. At the same time, also reflecting on the growth versus value ratio, which is in a downtrend. That needs to change. We can see growth and value both below the 21-day moving average. Cyclicals did put in a better performance on Friday with a bullish hammer close versus a bearish hammer close. Still, we had buyers at the low of the day for both growth and value, so there's a potential for follow-through, especially in these sectors with energy, materials, commodities all leading higher last week due to geopolitical tensions. If we take all 3 components, the small caps, large caps, and mid caps, the 1500 composite is neutral to slightly bullish. We did have a crossover, and histogram is trying to stay green. This is early stages of a recovery in price action that may very well continue this week. So we'll be looking for any signs of confirmation that buyers are stepping up. Tick cumulative would be the first thing we would be watching, in addition to the advanced decline and breadth. At the same time, we'd also like to see one of our indicators, the Russell 2000, find support here and turn higher. You can see Copac is starting to turn. Potential for a at least short-term trend higher if this bottom does fulfill and turn higher this week. With 2,000 stocks in that index, the Wilshire, a even broader measure of market participation, currently about 3,700 stocks, I believe. A little misleading. It's no longer 5,000 stocks. Still, we had a higher low where buyers did step in towards the lows and pushed it back up towards the middle of the daily range. More importantly, cycles are starting to turn here as well. So if this trough does turn into a trend higher, that would be another indication and confirmation that we could see the bulls return at this low, looking for higher prices. In addition, we're watching VIX. Our indicator here could turn green if the trend perpetuates this week. We did see a close in the lower part of the VIX range on Friday, which would give us reason to believe that we are a bit extended and may start to retrace back towards the 50-day moving average, while geopolitical tensions could keep this elevated for a bit longer. And we'd like to see breadth thrust indicators moving higher as well. Currently at the zero line for the big caps, mid caps, small caps, and the NASDAQ. With the latter McClellan oscillator flattening out last week, we had built a trough in the beginning of February. Started to look pretty good until Putin decided to invade Ukraine. So currently the trend is down with a higher potential for a retest of the lows, maybe even take those lows out this week. So I'd be cautious while looking for opportunities to add to longer term positions. The bond stock ratio in the lower panel shows that bonds are in favor versus equities at the current time. We're looking for this crossover and potentially a peak at some point as institutions park assets in the safety of bonds. We see this moving higher. Look for a push back towards the 200-day moving average if geopolitical tensions persist, with commodity prices moving higher like copper, along with gold and silver, both breaking out as the safety trade remains in play, along with crude oil prices, which bolted higher last week as the U.S. and allies weigh an embargo over Russian oil, exacerbating its move last week. And with most correlations breaking, we do see the U.S. dollar also moving higher, considered a safe haven for investors and institutions. The sector heat map has shifted. We can see a lot of strength in medical, healthcare, pharmaceuticals, aerospace and defense, building and construction, real estate, REITs, metals and mining, consumer staples, with weakness in financials, tech and semiconductors. Utilities also showed strength last week. International markets pulling back as well, while the South American countries, Brazil, Mexico, Chile, Argentina, all looking a little better. While we look for the sectors in the U.S. to improve a bit, energy is the highlight, XES, oil and gas exploration, utilities, healthcare remaining in play. While we wait for the remaining sectors to catch a bid, we do anticipate that this trend in the ratio between consumer discretionary and consumer staples to continue lower, while we look for this to reverse for any confirmation that the markets are starting to improve. Most of the stocks in the IBD 50 are related to transports or utilities, energy, metals and mining, some setups in insurance, steel, We had Cleveland Cliffs moving higher last week, continuing to show strength. With CF Industries and FMC, both of them from the agriculture industry group, fertilizers, pesticides, etc. FSK, one of the few stocks from the financial group that look good, continue to move higher. Franco-Nevada, gold mining, silver mining. JB Hunt, transports, that's looking very strong, with quite a few stocks showing potential for a follow-through from the IBD 50. In addition to real estate stocks like PSA Storage, with most of these stocks showing potential for a breakout in this group. About to take out the highs, 52-week highs, coming out of a base. Very clear on the weekly time frame, looking for a follow-through in real estate and REITs this week, like CubeSmart, another REIT in the self-storage industry group, looking for a follow-through above the 50-day this week. A lot of strength on Wednesday, Thursday, Friday, headed towards the 50-day on obvious volume, with MACD above the signal line and stochastics rising. Companies like Tractor Supply also following through. Look for a push higher, showing relative strength for the last 2 weeks after it bottomed. Institutions adding to positions on Tractor Supply. Metals and mining and copper related mining, silver, gold, you name it. Rio Tinto looking okay. Southern Copper breaking out, strength in the copper group. We also saw Vale pushing higher. Healthcare stocks like United Health look like they're going to break out as well. Maritime shippers showing some strength. We're watching for Zim to bounce off the 21-day this week, along with some of the energy plays like Viper Energy, looking for a follow-through, along with many of the energy names that are not as extended. In addition to some of the big caps like ConocoPhillips, looking for a follow-through. Volume showing institutions have been picking up shares. MACD has crossed. Energy names like Diamondback have yet to break out, looking for those to catch a bid as well. In addition to some of the more obvious places where you could put cash to work, SPHD, the Invesco S&P 500 high dividend, low volatility ETF, along with the Wisdom Tree high dividend fund, DHS, which we have a position we added to on Friday, looking for a continuation, making 52-week highs when the markets are making new lows. While we keep in mind that the individual names that make up these ETFs are also potential plays. So you can see here SPHD, the stocks that are in this particular ETF, energy related, utilities, consumer staples, healthcare, pharmaceutical names, energy names. So you could play on some of these as well, or you could just play the ETF, sit back and be less concerned with the current volatility, and look for opportunities to add like we did with DHS on Friday. Again, some of the names in DHS we're all familiar with: Philip Morris, Altria, AbbVie, Pfizer, Merck, Bristol Myers, Gilead, Amgen, and so on. So the choice is yours. This week, however, I'm going to take it a little bit easier. I want to see how the markets fare on Monday, Tuesday before doing anything. Most likely be doing a lot of day trading. And keeping in mind DHS and SPHD, don't really need to add to that just yet. We're looking for that to show relative strength, and we're looking for the markets to bounce. So that's going to do it for me for this week. This is a bit shorter video, but I think it makes sense to be a little bit more cautious this week as we wait for institutions to give us the thumbs up or thumbs down and trade accordingly. I'll send out a watch list later tonight around 12 midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check your inbox for that. Otherwise, take care, have a great weekend, what's left of it, and I'll talk to you soon. Take care.